Hi guys, let's talk about order types. Um, so order types are the kind of transactions you can execute with your broker. There are four basic ones that each broker should provide you. The four here are the market, the limit, the stop, and the stop limit. Okay, let's kind of just get right into it with a market order. So a market order is a request by an investor, usually made through a broker or a brokerage service, to buy or sell a security at the best available price in the current market. It is widely considered the fastest and most reliable way to enter or exit a trade and provides the most likely method of getting in or out of a trade quickly. For many large cap liquid stocks, market orders fill nearly instantaneously. Okay, so let's kind of take the main points there. Okay, so a market order is basically when you decide to do a transaction, whether it's a buy or sell, right? And you're basically saying, I'm willing to pay the current price that's being paid at the market. Okay, that's why it's the fastest way to enter or exit a trade because you're just like, okay, I'll take it. You have no target of a good price. You just like, I'm willing to pay this price. Okay. So one of the things behind that is that it can present a problem because things don't happen instantaneously. Okay. So you could be watching your stock uh, go, which A, that information has to travel from the exchange to you, right? Or from the broker and to you. And that takes time. And then, however fast your computer can draw the information, um, will also take time. So let's pretend that you are watching this thing and it's forming. So this might be having some lag, right? Already. And you click the button and it may get filled up here. Okay, so you're wondering what happened. I mean, that's I paid more than what I saw. Well, that's that lag time, right? And sometimes, your broker may not get the best deal during that time. So that thing, that range is what they call the slippage. Okay? That is when the there's a big change in price um, while you were aiming for something else. Okay, so that's the kind of that's the danger of doing a market order, and you decide to do that during opening bell. That could be that could be suicide at some parts. Okay, because if you look here on the 1 minute when the opening bell occurs, you know Tesla can swing from $849 to $859 in less than 4 to 5 minutes. And that is a practically almost uh, a $10.90 difference per share. So if you have hundreds or thousands of these shares, which at 800, that's going to be quite a bit of money. That is a pretty big spread that you're going to be working with. So, that's 1090, you multiply that by 100, that's like 1,000, right? Um, yeah, 1,090, or is it 10,090? I think it's 10,090. All right, so that's going to be that's quite a bit of a difference if you're going to do a market order. Okay, so what you want to do sometimes is say, no, you know what? I'm only willing to take a certain minimum, or I'm only for the share, or I'm only willing to pay a certain amount. That's what a limit order is. Okay, a limit order is to buy or sell stock at a very specific price or better, and it can only be executed when that price is reached. Okay, so if you're wanting to get a price, a certain price, the current market price has to get there at some point, or it won't execute. Okay, that's what that is. It's not guaranteed to execute, and it can only be filled if the market reaches that limited price. Right. So an example of that would be like, let's say this: you're wanting to sell your particular um, shares at a price that you thought it was going to go to, but it fails short to get there. Your sell will never execute, okay? Because you're saying, I will only take this as the minimum price for my shares, okay? So limit order guarantees you that you're going to get that price, but or better, but it has to get there. Okay, so that's the danger behind the limit order. All right, the next major one is a stop order. A stop order is basically a stop loss order, indicating that you want to trigger a sell or a buy when it reaches a specific price. Okay, so in this case, a stop loss order would execute. It would say, if it reaches this price, go ahead and convert the transaction now into a market order. Okay, so now go ahead now sell whatever that current price is. Okay, and remember, a market order, the cons behind the market order is slippage, right? Um, but if you're playing something that's moving really fast and you don't want to ever get skipped, you're going to want to use a market order because it's going to guarantee you to execute you. It's just not going to guarantee how much of a slippage it will execute your order. Okay. All right. The last one is a stop limit order. Okay. Now it's just a combination of instead of a market order, now it's the limit, where when the price reaches a specific um, the current price, as it reaches a specific price, the transaction will create another one or convert the current one into a limit order, where you're saying, now I'm only willing to pay this amount or accept this amount for the sale of the shares. Okay, so those are really the four main ones. One of the stop based ones are based on events saying that this price occurred, do something, whether sell right away or sell or purchase at a very specific price point, which are the limit orders and the type of a market order. Okay. There are some more advanced stuff that Webull does offer. I don't think they show up right here, but these are where you see the four right now. Okay, you got the limit, market, stop, or stop loss. Okay, so when it reaches that particular price, and then you got your stop limit, and this is not updating correctly, probably because I need to show that I'm logged in, but that'll show my account. So sorry guys, I'm not gonna show that part. But so when you're filling out this form, you're gonna either tell the system you're doing a buy, a sell, or short, right? Um, so that short only appears when you can perform a short on a particular stock. And Tesla is one of those most commonly shorted things. I think you guys may have heard my commentary about the shorts for Tesla. Right, so that's pretty much it. There are some more advanced ones. We'll kind of speak into that a little bit. Like here, this is the traditional order entry. This is the new order entry where it offers different, more advanced logic that can occur. Like saying, you want to sell one, have that one. If it's sold, create another one, and those kind of things. It's kind of chaining events and using events to trigger certain executions and different types of executions. Those executions being those transactions, right? Okay. I will have to review this a little more, and then once I identify exactly how it works, then I'll probably create a video. But it'll probably be quite a while before you guys will even start to use these kind of things. Master these because those guys here, the more advanced ones, just allows you to do these things in a kind of pre-programmed way. Okay. So everything really stems from these particular 4 types. Okay, that's it. Have a good day.